Good morning, good afternoon, and good evening, everyone. It's doing a sound check. Is everyone able to hear me clearly? And testing if everyone's able to hear me clearly. All right. Hear and see me clearly, actually. All right. Okay. Nice. Leandro. We got good evening, advocate. Right. We got P.MGV. Right. Good morning. I'm doing good, man. I'm doing good. I had to a little bit of solo parenting last evening, so I had early night. Yeah, so I'm all fresh now actually. Right, Yamilu, nice to see you. Graham, nice to see you here again. I think it's been a while. Right, good stuff, man. Fabio, nice to see you. Philip, thanks for tuning in. Right, depending on whether it's a good morning or good afternoon or good evening for you guys, regardless, thanks for tuning in, right? Really appreciate seeing you guys here. Yeah, nice to see you here, right? Nice to know that this loud and clear. And even as we are approaching, right, even as we are approaching December, right, it's nice to see the whole bunch, the usual gang over here, right? Yeah, it's really nice to see you guys over here. Okay, but yeah, it's I think towards the end of this year, right, the webinars are going to focus on, I mean, not only our live market analysis now, right, but the webinars on Tuesdays, right, our educational webinars, we have a little bit of a focus on like setting goals for 2024, right, how to keep and manage a trading journal properly, right, how a lot of these things like reviewing your trades, reviewing your strategy, right? And yes, I always want to know, and if anyone's open to share how their trading has been, right, for 2024, for 2023, right? And of course, some of the topics that you guys want to see and see for 2024. So if you guys have suggestions on some of the topics that you want the team to cover, right, moving on from 2024 onwards, let me know. I will share the list so that everyone will cover it. Okay, and yeah, just want to check one thing with you guys that the where am I? Yeah, the internet connection should be stable. The stream is not the stream is not lagging for you guys, right? Okay, hey Lucio, nice to see you tune in. All right. Okay. Good stuff. Good stuff. Right. So okay, these are a few of the things. Right. Anyway, back to today's back to today's webinar. Right. Okay, Ren, we will have analysis on pound dollar in a bit. Right. In a bit. Okay. So welcome back to our usual weekly pre-market live analysis. Right. It's me again, your host Desmond. Right. And it's nice to see you guys here. Right, it's we do this every week. I think we'll be doing this for the next 3 weeks before Christmas. Yeah, I think it's that Christmas weekend, 25th, 26th, where either we won't be doing it or someone else will be doing it. Right, probably we'll be giving that a skip before we resume again in 2024. Okay, good request, good suggestion there, Fabio. The thing about stocks is that there are so many, whether it's US or UK, the big ones, probably US, right? There are so many of them. So usually we look at the indices, but if there's a particular stock that you want to look at, do send a request for it and we see how we can take a look at it, because there are really too many to look through unless you go through the major ones, the fangs of the and the bigger movers around, those hot in the news like Microsoft and stuff, right? So if you have a specific one you want me to look at, do let me know too. Okay, Forex Talent, good evening, nice to see you tune in, man. So disclaimer, remember, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade, all right? Now, And of course, just take a second to read through this disclaimer. We'll be going through it's a live market analysis, but it's not trading recommendations. All right, very important key difference over here. Okay, now let's continue on. Our agenda for today, right, is that got a couple of key news events that usually if you want me to take a look at, I'll take a look at, but I will dive into the analysis on the major FX pairs, right, commodities, crypto, indices, right, and some of the crosses, because it's usually the crosses that give us pretty good views on the market. Okay, and yes, if you have any custom requests you want me to take a look at, right, any instruments you want me to take a look at, let me know. I'll do my best to go through them if time permits. All right, if we have the time. Okay, so introducing your host for today. For those of you guys who are wondering, who's this guy over here, right? My name is Desmond Leong. So I'm an analyst over here at IC Markets, right? Run the award-winning research firm Everest Fortune Group, also the Forex Army. Currently rebranded to Rocket, ROCKQET. So you guys want to check it out, go check it out. It's our new site. If you want to find me, follow me on Instagram. I'm not sure you can see it, right? It's over here, Comfy Desmond, right? Go check it out, right? Very simple Instagram stuff. Just mainly me, my kid, my cat, and I. Yes. We are finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research, right? Not recently passed a prop firm trading test, right? 100K prop firm trading test. I think I have a quick glance of the set over here. 100K trading test. It's quite simple, right? I think it was fairly easy passing stage 1 and stage 2 evaluation, right? I mean, not too simple, right? I think because my trading style is we got our founder cat over here. You want to see? Right, for those of you guys who want to see, right? I'm pretty sure I fed her already. No idea why she keeps, right, coming over here, right? But yeah, so this prop firm test give you two pretty hard criteria to pass, and if you pass, you manage some funds over there, right? So yeah, that went quite well, right? So I do want to let you guys know that it has been something that some people raised previously. It's like, hey, can on top of your analysis, which if you guys have been around, so about a 70% hit rate, week on week, all recorded live here on YouTube, right? But we can also I decided to take one of that just to prove a point that if you just follow the analysis over here, right, a good enough chance to trade really profitably, right? Because we don't only have a 70% hit rate, but usually our risk reward is like 1:1.5, 1:2, right? So hope that I answer some of the questions that some of you guys might have. All right, so yeah, we have a special partnership with IC Markets where we bring you guys the good stuff, the juicy stuff, right? The stuff that will take your trading to the next level. Okay, now let's begin today's analysis. Yeah, let's begin today's analysis. All right, so how always begin? How always begin is back here. I do want to take a quick look at crypto. Okay, I do want to take a quick look at crypto because of all the volatility that has been happening on Bitcoin, Ethereum, right? The news that has been surrounding hey Joey, nice to see you, man. Right, the news that has been surrounding a lot of the what's the word for it, right? The news that has been surrounding like Binance and stuff, right? And I think there are some other crypto firms that were recently had like sued. So there's been a lot of volatility. You will notice it in like the wicks and the candle movements over here, all seeming to cap out about over here, right? This kind of seems like the major resistance that a lot of this is capping out at, right? Yamil just mentioned that the sound is not good. Can I just check with everyone? If the sound is okay? Is the sound okay for everyone? Okay. Fabio says it is normal over there. What about everyone else? Oh, it's okay there. All right. So yeah, it's, for those of you guys who are tuning in, right? Can anyone? Sound is good. All right. So Yamil, yeah, it's I guess all right, Yamil. Perhaps it's the speakers. Right. So yeah, perhaps it's the speakers. So go check out your speakers, or maybe switch to a different source like earphones or something. The sound should be okay. Right. The sound should be okay. Okay. Now yeah. So the first thing I look at is crypto, right? So you would notice, right? You would notice that it kind of caps off a bit over here. I don't put my major resistance over here. You notice, right? I don't put my major resistance over here. I actually put it down here. And the reason why I put it down here, right, is because price has reacted many times off this level, right? You got one reaction, two reaction, three reactions, four reactions, right? You got four reactions over here compared to one reaction, right? Compared to one single reaction if I put it over here. So this is clearly the level. Notice, right? Notice, and these are the subtle little differences that will help separate profitable traders from unprofitable traders. It's a small little difference in the levels, and it's something I emphasize to my team a lot too, right? It's something I emphasize to my team a lot, is that you don't I don't put it down here, right? Because technically if I put it down here, I capture more points. But you notice the one thing I try not to do is to have the line intercept too many too many bodies of candles, right? That's a key thing. Intercepting a few is fine, right? But what you want to try to do is you want to try to capture as many of the you want to touch the candles as many times as possible, right? Without cutting the body of the candles, right? So there's a big difference between here and even here. In here, right, you notice that it cuts the body over here, it cuts the bodies over here, right? But if I move it just slightly higher to over here, it touches enough points without cutting the bodies. Okay, so that's one of the key things to look out for, right? Thank you everyone for doing a universal sound check. It's one of the most efficient ones I've seen, right? And helping our dear friend Yamil I figure out what was wrong with the sound. All right, so this is one of the key resistance over here, and notice when I pick the support, right? I'm gonna pick it over here. I'm not gonna pick it over here, right? I'm actually gonna pick it over here. Maybe fine tune it to just get this level, right? And this is how you find good support and resistance levels, right? This one captures the most number of nice points, right? Captures one level here, one level here, one level here, right? And it's good enough for our analysis, right? Good enough for analysis. And then we start stretching further back and see if any of these levels, right? You'll notice that I start hovering my mouse up and down. We see if any of these levels actually line up with something, right? You could argue that your first resistance over here could stretch even all the way back to over here, right? You look at this, right? Your first resistance could technically be stretched all the way back, right? Your first resistance, I'm just going to put this as a dotted line, could technically be stretched all the way back to here, right? If you look at it clearly, right, where this multiple times price bounced out before it broke out, right? You could argue that it can stretch all the way back to here. Okay, so you do know that this resistance level that price is bouncing off is not just any random resistance level. Okay, and what I usually do is a little bit of fine tuning of Fibonacci just to see if price is reacting off a key Fibonacci I'm not noticing, right? And so far, they all look quite okay. It's like I don't notice any Fibonacci levels jumping out of the blue, right? Which is good. Maybe the only one could be a 78.6 percent kind of Fibonacci. Let me just see if there's anything there. Nope. I guess the only one could be a big 78.6 kind of Fibonacci projection, but doesn't matter too much. It seems like price just touched this week of this candle just touched the 78.6% projection before reversing down. Okay, so anyway, the key idea over here, right? The key idea here is that now you have two clearly defined ranges. Okay, if one gets broken, right, it could trigger a bigger move down, right? That means if the support gets broken, you could arguably, right, see it drop all the way down to the second support, because between this first support and this second support is almost a free fall, right? There is no other, look at this, there's no other key level in between, right? Maybe they have an overlap over here, right? But if you look at it clearly, there's no other key level that price could potentially bounce off, right? So you're almost going to see a free fall. So this is a very, very important key support level. I believe it kind of lines up with there we go, it lines up with the 23%, 23.6% Fibonacci retracement. Okay, 23% Fibonacci retracement, which is always the key Fibonacci retracements to watch out for. If it breaks this level and this support level, you could expect a nice little free fall towards the second support down here. So very important level for it to maintain, right? And in terms of the second resistance level, no, there isn't a nice and clear level that we can play from. No, there isn't a nice and clear level for us to play from, sadly. Right, so I got my resistance area up here, but yeah, there is no level. So physical level, right? And what I want to emphasize to you guys over here, sometimes it's a market that you might not be trading, but the methodology and approach to analyzing the markets is very important for you to listen to and learn from, right? Because different, if you take away the symbols that we're analyzing, like Bitcoin, right? The charts, right, on a small time frame, this could look like any other chart, right? This could look like it euro dollar, this could look like pound dollar, right, on the or any of the other crosses, right? So the methodology behind analyzing each instrument is the same, right? There's nothing really special for a different instrument, all right, that we're analyzing. Instead, maybe the a few of them might be more volatile, right? But it might lead to bigger wicks and stuff. But the approach, right, the foundation is the same. So that is what you need to. That's why it's very important to listen to this analysis. All right. If you notice that there isn't a next key level on top, what's the next natural thing to do is to start finding Fibonacci levels. Okay, I will click on all fibs switch. We'll pull out all different fibs and notice that the 78.6, you notice that this whole bunch of Fibonacci levels are not valid anymore, right? Because price has broken through them one way or another. The next one that has been untested is the 78.6 retracement all the way up to here. Okay, so that is one way to find a key the next Fibonacci level. So I'm just going to leave 78.6 over here. The other way is to draw another Fibonacci projection from here up to here and down to here, right? And see, is there another level, probably 61.8. Yeah, you can see the major 61.8 retracement just about over there. Okay, so this allows us to zoom in a little bit more and at this current chart and say that if price really broke this level, the next closest level that you probably approach is up here, where we're going to put a second resistance. Okay, so you know where price might make a push up to if it breaks the first resistance. And this is how you identify levels even in a chart where you're making higher highs. Okay, all right, I won't dive too much into Ethereum. Should be about the same, right? Should be about the same. I think we it dropped to the initial level that we're looking at. We got the same major high over here. Notice I'm picking the levels over here. Major first resistance over here. How far back can this go? Not too far back, I guess. And this is why it's important to do a higher time frame analysis. You notice that this resistance is not any normal resistance. It actually stretches as far back as this level over here, which is our major pullback an overlap level. Remember, a lot of people saw this bounce happen and they were waiting for this bounce to happen, right? It did not happen, right? Instead, it broke out, and which is why a lot of people were long over here, right? They were expecting prices to go up. So when price finally comes back here, they get out of their long positions, which means they short the trade, and those who missed it, basically round two, they short the trade again. Okay, now where is my object tree? Is this my object tree? Yes. Yeah, so major first resistance here. If you're looking at it from a 4-hour chart, even a 4-hour chart or the 1-day chart, you might not have noticed that it was a big resistance level up there, but only if you zoom all the way back, right, are you able to realize the importance of this level. Okay, the importance of this level. And I believe that it's also a big Fibonacci level. I suspect, sorry. Slightly below the 50% Fibonacci retracement, right? Slightly below the 50% Fibonacci retracement over here. Okay, now, we established this as a major resistance, and if price really breaks past this, right, the next one is a big 50% Fibonacci retracement up here. Okay, in terms of support, right, it's a little bit tricky. This one's a little bit tricky. It's a bit tricky, sorry. So this is where you can use a different time frame to actually analyze the charts. Okay, so if I were just strictly looking at this this chart over here, I would say with a degree of confidence that there's a fair bit of support levels over here, right? You notice you got a nice little overlap support over here, right? This is a decent overlap support, right? You notice that price have a big reaction off here, right? Price is bouncing off multiple times over here. So this is a nice overlap. This week, right? This week, if you change it to the higher time frame, to the daily chart, you notice this week is actually this movement over here, this spike, right? So you could actually train your eye to notice that that is sometimes the levels might not seem that clear on the daily time, on the one time frame, but if you swap it a different time frame, it actually makes it clearer. This only works if you are swapping up a time frame, meaning going up a time frame versus going down a time frame, right? So we're going up a time frame, right? It helps us make sense of some of the weeks that we're seeing, and then it also helps us establish that this is actually a pretty nice overlap level on the higher time frame. So same thing that we're expecting for crypto, right? For Bitcoin, price is likely to reverse from its all-time high, and the first key support down here is the same key support on Bitcoin. Okay, now we look at DXY, right? We're calling a bounce last week. It bounced up and it went back down. Okay, meaning it did a nice little bounce from where we forecasted it would bounce. And of course, now I'm just gonna clear everything and just look at this from a fresh perspective. I still think there's a nice bit of support level over here, right? Pretty nice bit of support level that price is once again back down testing, right? And it also happens to line up with a nice little 50% Fibonacci retracement, and not sure if there's anything over here. 78.6% Fibonacci projection and a 100% Fibonacci projection, all of it lining down here, right? All of it lining up to that one little level over here, right? So we got a nice bit of Fibonacci confluence over here, right? We got the 50% retracement, 78.6 projection, 100% projection, right? I know it's a little bit hard to see, but this is what I mean by confluence, Fibonacci confluence. Okay, so you got a nice bit of it over there, along with a nice little support level. Okay, so what does this mean is that we're likely, I like the initial bounce that we saw over here. No divergence yet on RSI. Let's take a quick look at stochastic. No divergence yet on stochastic, right? So, I mean, it is a key level that price is kind of going down to, right? Almost at its limit, right? Almost at its limit, right? Where the previous major bounces occurred, right? You notice that this 12% seems to be a limit. It rarely ever seems to go below this 12% level. If you take a look at it, if you go all the way back here, right? I'm just going to you notice that the stochastic rarely goes below 12%, right? This seems to be the hidden limit of stochastic, right? Each time it comes close to this level, it kind of bounces and it never ever goes below there, right? So we are looking at price right about at a key level in stochastic, all right? So we should be seeing, ideally, a nice little bounce from here, right? And if price were to go up, I'll be a little bit hesitant, right, of it rising all the way up to there. Maybe the 23 and 38% would be enough, meaning that we could, all right, the first one was over here, the second one is over here. If you're confident enough, you can play the move up to this 38%, which happens to be a decent enough kind of overlap resistance, right? A decent enough kind of overlap resistance, right? So yeah, if you're confident enough, you could see a smaller bounce up to here, right? But just take note that our intermediate resistance, that price does need to clear this level over here, okay? Clear this level. But if price breaks this level, we should be seeing a fair bit of a drop, right? Where could it drop to? I'll only be confident enough of saying it will drop to about here, where the next kind of little bit of overlap resistance is, right? Won't be too confident to say anywhere else because it might make a bounce off this level, right? But you can play the move down to here if it breaks down, okay? So now we move on to euro dollar, right? We forecasted the reversal previously. It dropped very nicely from the reversal. It's back up here again. So if we're expecting, in terms of correlation, if we're expecting a bounce on euro dollar on DXY, we should be expecting a similar kind of bounce on euro dollar, okay? DXY and euro dollar are inversely correlated, okay? So same thing over here. All right, same thing over here. I will show you how I get the levels for those who are tuning in, right? Nice Fibonacci retracement from an all-time high to all-time low. Remember, when one key thing that I want to teach you guys is that you need to ensure that the Fibonacci, you notice that when you draw it, there's this little dotted line that goes through the middle, all right? Price should ideally be following this dotted line as much as possible for there to be a good kind of what's the word for it? For there to be for Fibonacci to be strong, okay? The reason for that is because I've seen some people, they draw Fibonacci from here, they draw Fibonacci from a low of this point to a high of this point, right? And you notice that, if you notice that the Fibonacci line is here, right? This is the middle Fibonacci line, right? Price is deviating too far from this Fibonacci line, right? Price is deviating too far from this Fibonacci line. That's a bad sign for us, right? That means that Fibonacci will not work, okay? Or it's very weak, right? So when you draw Fibonacci line, there is this thing called a Fibonacci trend line, right? If you don't believe, double click on it. It's literally called a Fibonacci trend line, right? It's because it's supposed to follow the trend of the markets. So if you don't follow the trend markets, it actually weakens the analysis, right? So whenever I see these kind of charts that go very well, and it, from the top to the bottom, it matches the Fibonacci very nicely, it catches the Fibonacci trend line very nicely, then you know you got an effective Fibonacci retracement. You will notice that one reason why harmonics actually works quite well, right? And it's one of the few other applications to Fibonacci which I support, is because of its use of strict Fibonacci kind of rules, right? So you notice that harmonics, when you draw a harmonic, there's a big emphasis, for those of you guys who don't know, harmonics are like this, right? For those of you guys who know, maybe they're drawing a harmonic something like this, right? You have 1 point, 2 point, 3 points, 4 points, not the best, but maybe a 5 points over here, right? You notice why harmonics work very well is because they emphasize on the shape of a bat, of a shark, of a butterfly. I'm not sure what all different patterns, and the emphasis on this kind of patterns is that you then need to ensure that your price, right, kind of follows your price follows the what's the word for it, follows the shape, right? And that by itself is actually a good way of making price follow the Fibonacci trend line, right? Which is why harmonics is good. It's because of this kind of one of their teachings, which actually in one way or another they don't. They are for those who might practice it. They don't realize that it is actually applying Fibonacci best practices in terms of the trend line. Okay, so that is the MT4 true. So oh yeah, good stuff. Yeah, I just realized that yes, you're using my true stochastic indicator. Good stuff, man. All right. But yeah, so we should be seeing, hopefully be seeing a bounce on DXY, which means that we should be seeing a nice reversal, 61.8 retracement reversal on euro dollar. Nice bit of little bit of overlap resistance, you could argue about over here. Nice bit of resistance, nice bit of Fibonacci resistance, and I suspect, you know, it could be a bit of a Fibonacci confluence too. I can't tell for sure. Nope, 100% is slightly lower, but the 78.6% is right at that level. You know, a very nice 78.6% Fibonacci projection right at this level over here, right? So we should be able to see nice confluence. And similarly, I'm going to highlight this entire area over here. I'm going to highlight this entire area here, and we could see a reversal, right? We could see a reversal. Where are we going to see reversal to? You know, same thing. You could probably optimistically play it down to the 20. It first needs to break this overlap 23% intermediate support, and only when it breaks, oh shit, I mean, whoops, excuse my French. Yeah, only if it breaks that level, right, then it could ideally drop further to the 38% kind of Fibonacci retracement down here, which would be our main first support, right? So ideally, be looking for a reversal down to there. Okay, same thing with stochastic, right? Nice bit of resistance that we're seeing on stochastic, right? Notice that price hardly ever breaks beyond this major resistance level, right? So nice bit of resistance definitely for us to take a look at, right? So hopefully we see a nice reversal for euro dollar, which means a bounce, same bounce that we're expecting on dollar franc, right? Same bounce that we're expecting on dollar franc, right? It actually made a nice bounce previously, right? This little candle over here, it made a bounce. Now it's back down here. I am a little bit concerned. This still has to be the key support level, right? This still has to be the key support level. Probably have to fine tune it a bit. Let me see. Fibonacci expansion. Okay. Fibonacci extension. If I were to pick a clearer level, right, I would think that the level to play the bounce from, right, is this level over here, right? So a little bit further down, right, where we can hopefully see a bounce. And for dollar franc, I'll definitely play the reversal just back up there. Should be enough, right? So we're going to play for a bounce on dollar franc, which is a bounce on the DXY too, right? It's a bounce on DXY, right, up to the first resistance. Clear enough movement, right? For those of you guys who are unsure about how to use Fibonacci expansions, it's the same as like using a Fibonacci projection, right? You need to look for like a zigzag, like you can see this thing here, a nice little zigzag that comes all the way down to the key support level. Okay, It's the same as using a Fibonacci projection. 1 point, 2 points, 3 points, right? Just that for Fibonacci projections, yeah, I think the 100% is a little bit too far away, which is why we're not using it. But there could be a nice little Fibonacci level over here, maybe a 78.6% Fibonacci projection that comes down right at this level, right? So I love the amount of Fibonacci confluence and levels that we're seeing over here, and likely be able to play this bounce on dollar franc. Okay, now pound dollar, like someone, I think Ren requested, right? We're looking at this key level, key resistance level that price is approaching. So price is right at that level. We could actually short it. If you want to know how we got that level, nice big resistance level over here, nice pullback resistance level. You notice that price bounce off this level once, bounce off, and this one exceeded, but it bounced off a bit, right? So it seems to be respecting this level quite a bit, right? And if you draw a Fibonacci level, it seems to be lining up very nicely there. What I like is that all the levels are lining up at the same 50% Fibonacci retracement, lining up exactly over here, right? So what I like about this is that next week when I come, I'm either going to be super correct or I'm going to be super wrong on a lot of different things, because every single level is lining up nicely, meaning that they're all in the key resistance levels. Okay, 100% Fibonacci level right over there, projection, right? Okay, I'll take a look at euro pound in a bit, right? So man, it looks like so it not necessarily in terms of correlation, right? And I will share about that in a bit. Yeah, it looks like it's approaching 61, 78% Fibonacci projection. Now the reason that euro pound is not necessarily correlated, right? But instead it's how you interpret euro dollar and pound dollar, right? So if you have EUR, right? EUR, euro dollar, you look at the strength of euro dollar and look at maybe GBP USD, GBP USD. You are essentially looking at two instruments and cancelling out the USD. You're mainly just looking at euro pound, right? Which is strength of euro versus strength of pound dollar, right? Means that you actually are looking at which one is going to drop stronger. Is euro going to drop stronger, or is pound going to drop stronger, right? And that is how you're going to, euro pound will tell you, right? Will give you insights into that, right? But this is not so much of correlation, but is the relationship between euro dollar and pound dollar, right? So if you're expecting a bigger drop, right? If you're expecting a bigger drop on euro dollar, on pound dollar, we'll take a look at it in a bit to see which one might drop more. And yeah, if pound dollar does reverse, we can expect it, we could expect it to reverse off the first resistance over here and drop down to the first support down here. Okay, and my second resistance, I'll be putting it just about at this level over here, which would be my second resistance. Okay, if we do look at euro pound, hard to say it is approaching support though. I mean, it's a little bit difficult to identify the support level. A little bit of a trend line that I do notice, at least, right? Looks like it might be breaking out the trend line. So in any case, right, we're not going to do analysis on euro pound per se over here because it's a little bit hard. It's a little bit hard to find the key levels, right? But what you do notice is that maybe the next key level is down here, right? The next key level is down here. So it does look like price might make a bearish acceleration downwards, which means euro dollar versus pound dollar. Euro is likely to drop at a stronger rate than pound dollar, because we are both bearish on euro dollar and pound dollar. Means that out of between euro dollar and pound dollar, euro is likely to see the bigger and faster drop versus pound dollar, right? That'll be the only key difference that we're looking at. Okay, now so that is how you apply something like euro pound to the analysis of euro dollar and pound dollar. Okay, look at dollar yen, right? We called for the drop all the way down to first support. It reaches level and it bounced up, right? So this was the downside confirmation that we're looking at. If you got in on this trade, congratulations, good money. Notice that we didn't call the move like too far, right? So it just went all the way down to here, touched the level, close in profit, and we're out. Now, what can we establish for dollar yen is that we can't establish anything, right? It is a hard level, right? You got support level over here, you got nice bit of resistance level over there. If you don't trade it, I probably won't trade it, because price is right about in the middle of nowhere, right? You got a resistance level up here, you got a support level up here, and price is literally in the middle. So if I can, I probably will stay away from it, right? Probably found a little bit of support. Yeah, probably found a little bit of support on the Ichimoku cloud, right? So likely maybe going to inch up towards the first resistance, but hard for me to call a move on dollar yen, right? So I tend to stay away from it, right? Dollar CAD, we were looking for a bounce. Looks like it didn't really work out that nicely. I think I highlighted that I wasn't too confident of the bounce itself, right? So this didn't work out that nicely. How we can realign on this move? It's hard to find a support. I can't confidently find a key support level to look at. Maybe the 100% kind of projection over here, right? So maybe this as like the first support, but I'm not so confident about I'm not so confident about it, right? Yeah, I'm not too confident about it, right? So probably just about 100% projection down here. We got a question from Karim, hi, hello, what is your main strategy? Trading breakouts or support resistance ladder? Are you selling at resistance, buying at supports, right? I think, Karim, what you're asking is whether your trading strategy is contrarian or breakout, right? Okay, yeah, it's contrarian or breakout. Just let me check that my latency is okay. Okay, you guys can hear me, right? So what Karim is asking is that, am I a breakout trader, right, or am I a contrarian trader? Let me share with you the difference is that when you see a key support level over here, right, contrarian traders, right, they play the reversal. Breakout traders, they play the breakout. Okay, so that's the main difference. Contrarian traders like to play reversal, breakout traders like to play a breakout. Now, the answer to that, Karim, is I'm both, right? So the way to know whether, essentially, if you boil down everything to its key decision is, what do you do when price reaches a support? Are you going to buy or are you going to sell, right? And the only way to accurately filter that, if you follow my webinars, is down to correlation, right? So if I notice, right, at DXY, right, some people might be saying that, oh, might be seeing a little bit of we might be seeing a breakout over here. Now you find one level here on DXY and say, is it going to be a breakout or support? That's the key decision that you're making, right? Is it are you contrarian or are you breakout, right? Now there's no right way to answer that unless you start correlating, right? Euro dollar is also on resistance, dollar franc is also on support, right? So you start lining up the pieces, and then you realize that what the market is telling you is that it's more likely a chance that a bounce is going to happen, because dollar franc DXY on support, euro dollar, pound dollar on resistance, all of these are strongly positively and negatively correlated, right? Then the market is telling you that you should be a contrarian trader on the day. The danger, right? The danger is, imagine, right? Just to give you an illustration over here, right? When you compare DXY with euro dollar, okay, with euro dollar, you look at them, they move in opposite they move in opposite directions of each other, right? When one goes down and one goes up, the other goes up, the other goes down, right? They are strongly negatively correlated, right? So they, you know, when you're expecting a bounce on one, you should be expecting a reversal on the other, right? If you're expecting a bounce on euro dollar, on DXY, you should be expecting a reversal on euro dollar. Now the danger is when this happens, and I'm just going to show it to you. I'm just going to show it to you over here, right? I'm just going to draw it up here, right? On euro dollar, on DXY here, we are seeing price come down, right? And it's on this key level, so we are expecting a bounce to occur, okay? The danger is that for let me find that level. For euro dollar, right? Euro dollar, ideally at this exact point of time where you're gonna make the decision, euro dollar, where's my brush? Yeah, euro dollar should be approaching over here, and it should be right at this level where a key resistance is, so you can expect a reversal. The danger, right? The danger is if euro dollar was actually over here, right? Euro dollar is here, here. So euro dollar might have broken out of the resistance already. So it might look like it's actually broken out and is going to rise, right? So this is the danger when they are not correlated. When one is telling you that it's going to bounce, and the other is supposed to tell you, this would have been the ideal scenario when it price reaches here, right? And then you can expect a reversal at the same time. When the things are not lining up, then it will change your perspective whether you should be you should be playing a breakout or a reversal at the time, right? High low of a bigger move down with yes, Karim. Essentially Fibonacci confluence. You can look at just look at the way that we are analyzing the moves, right? Even just let me remove all these things. You're analyzing the move from here, and you'll notice that yes, we are using Fibonacci confluence, right? Hey Jake, nice to see you tune in, right? And the high low of a bigger move now with a low high from a retracement wave. So we don't only use Fibonacci. Fibonacci confluence is not only Fibonacci retracements, but it's Fibonacci retracements, right? Fibonacci expansions, right? Which is basically your negative levels, right? Fibonacci projections and Fibonacci extensions, right? So I did a webinar on that previously, right? Go check it out. It should be in the list of IC Markets recordings, right? But yes, to effectively do Fibonacci confluence, it's not just drawing about Fibonacci retracements. You'll notice that how I found this retracement level here, I just touched on this really quickly, is I did a combination, right? I use a combination of a Fibonacci retracement from a low to a high. Over here, you got 50% that lines up at this key support level. You do a Fibonacci projection from here down to here, up to here. And you look closely, right? You look at the level that's going down. It's 100% Fibonacci projection that lines up over here. And the last one is a Fibonacci projection up, down to here. And it's a 78.6% Fibonacci that comes down to here. Yep, 78.6. I'm going to move this a little bit down and up so you can wiggle it just to see. That's the 78.6 Fibonacci projection that we're looking at. So using a combination of retracement and projection along with a key support level, you find a nice key level over here. So it's not only Fibonacci confluence, right? It's also a combination of support and resistance levels and correlation to help you identify where you might play a bounce from. Okay, now onto WTI. Okay, WTI key support, key resistance levels. Price is in between both levels, so I probably won't be calling a move on this. Right, it's really kind of in between both, so it's a little bit hard to call. Right, so a neutral on WTI. On gold, no, this was not last week's analysis, right? This was not last week's analysis. This year, gold is a little bit tricky over here, right? We got the nice little support level over here, right? We got a nice little support level over here, which I'm identifying, and probably the only kind of resistance that we can see is maybe this little bit of resistance up here. A little bit hard to say, a little bit hard to say, a little bit hard to find any key levels actually, right? I wouldn't be confident of calling any move over here, right? Because there isn't a correlated instrument for me to really look at. But if I was looking at this, right, I would probably put this as an upside confirmation, meaning that price probably needs to break this level to trigger a further move on the upside. Okay, that's probably the only key things I'm going to look at. Right, no worries, Yamidu. Right, and yes, Karen, I don't see that many I don't see that many people using Fibonacci Confluence. So if you do, please hang around, right? So it's nice to have more people use Fibonacci Confluence, right? To me, it's one of the best ways to trade, right? So it's always nice to see other people use it. Okay, Aussie dollar and Kiwi dollar, right? A little bit of divergence. This didn't work out that nicely, right? This was one of the moves that I was looking at last week. It didn't work out that nicely, honestly, right? Sadly, right? I took a trade on this, right? Aussie dollar didn't work out that nicely, right? But now price is approaching this key resistance level over here, right? It's what we call a pullback, right? Meaning that price previously bounced off this level very nicely and is making a nice little pullback to this level. So it's always a very strong level to play a reversal from, right? In terms of Fibonacci levels, notice it is a key 50% Fibonacci over there, and I believe it's a nice bit of 100% projection. It's a nice 100% projection that lines up over there too. That means it's a nice little zigzag kind of movement that we're expecting over here that lines up with a nice little pullback resistance that lines up with a bigger 50% Fibonacci retracement. Okay, all of it kind of lining up there, which means that ideally, we could see a reversal. We could see a short-term reversal for price to make a push down, right, minimally to this level. You could argue that it already happened over here, right? This movement already happened. Just let me see if there's any movement on stochastic. Nope. Nothing really on stochastic. Yeah, so we could, see another reversal back down to here, right? For Aussie dollar, okay? For Aussie dollar over here. Negative 27 Fibonacci expansion right at level 2. So it's pretty nice. Let me see, negative 27. I don't think there's probably a negative 27, negative 61.8. Yeah, a little bit of confluence up here. So if I were to pick another level, maybe over here as a level that if it doesn't reverse from here, it might like kind of spike up to, right? The second resistance over here. Okay, so that's the view on Aussie dollar, Kiwi dollar, WTI, gold. Don't think there's much to look at on the indices front. It's all on key resistance. Could be seeing a bit of a reversal too, right? Not much of a view I have on indices. It's really a bit hard to call. Approaching an all-time high again, right? So not much of a view on indices that we are looking at. Okay, so I hope this covers all the instruments that you guys have requested. Thank you for tuning in to this session wherever you are, right? If you found it useful, please help me leave a thumbs up, right? Smash that like button, right? It really helps the YouTube algorithm, and basically spread this message, this video better for people who are doing who likes a very very technical approach to technical analysis, right? And yes, wherever you're tuning in from, right? Thank you for staying with me throughout today's session. Thank you for tuning in, right? I hope to see the same familiar faces not only towards the end of 2023, but when 2024 begins, right? We have very exciting news to let you guys know here at IC Markets, right? So stay tuned the next few weeks, right? You'll be seeing a lot more of me, right? And some very, very interesting news announcements for this Christmas season, all right? Nasdaq, right? Okay, maybe I take one last look at Nasdaq. If you ask me the hot trade, right? Path, the hot trade this week is definitely euro dollar, pound dollar, and dollar franc, right? Dollar franc, we are expecting the bounce on dollar franc. We're expecting the reversal on pound dollar and reversal on euro dollar. There'll be the hot trades this week, right? Yeah, Jake. I mean Nasdaq, right? I just want to take a quick look at it. If I were to just skim really quickly through Nasdaq, testing a key resistance over here, it looks like it's breaking out of it. I don't see any big, or at least a chart. Any big resistance. It's hard to trade this, Jake, right? Remember, and this is something we'll be covering pretty soon, is that if a trade should never be killing you, okay? A trade should never be killing you, because you should have an idea on how a trade works out and evaluate your current trade as it is now. Are you still sticking to your original plan, or have you went into revenge trading mode trying to make back what you lost, right? So you should not, a trade should never be killing you. A trade should hit you, meaning that if you lose, you take a hit of 1%, 2%, right? But it should never be killing you, because for it to be killing you, it means that you have repeatedly went back to try to take a shot at it, right? And it's not working out. That's why it's killing you, right? And that means your trade management approach is wrong, right? If a trade is not working out, take it on the chin. It's not working out. I've lost money on it, and move on, right? Looking at the charts here, if you've been following my analysis, right, I guess it's not really any key levels that you can really trade from here, right? The technicals are not very nice, right? So yes, Jake, right? Remember your approach to trading, right? If you look at the chart right now, look at your trade, and are you still sticking to your original analysis? If you're not, cut your losses and look at all the, because if you're stuck on one trade, you don't get to utilize the opportunities on the other trades like euro dollar, pound dollar, dollar franc, which are all lining up very nicely. Okay, so yeah, there's a big part to trade management, which I want you guys to maybe end the year strongly with, and to 2024 with, right? So don't hang in shorts unless you have a predefined level where you're getting out of, right? You need to know, understand, right? Give yourself a little bit of breathing space, right? If you draw the Nike tick, I think maybe, right, the limit, is 161.8 over here, right? That could be the limit. So anything above, if it goes above 161, you, maybe for me personally, I say that, I'm out of the trade, right? I'm looking at this 161 over here, right? If it goes beyond 161, I have no form of analysis anymore. Okay, so yeah, always have a predefined exit and risk only what pre-allocated amount, so that if your stop loss gets hit, you're looking at 1 or maybe a 2% loss, right? You should not be adding on to short positions endlessly. Okay, right? Kazumex, thank you very much, right? All right, thank you for your kind words, Kazumex, right? Help me smash the thumbs up button, right? We need to tell IC Markets to get our pre-market analysis out to more people, right? But if you've been with me, right, through the years, right, I think I've been doing these live streams for many years. One reason why we keep our YouTube live stream is because I stick my neck out there, right, when calling these moves, right? And you just look at the past years of analysis, right? Always got a pretty decent hit rate of about 70%, right? With good risk to reward management, good trade management, rather. So I hope to have you join me, 2024 and beyond, and of course ending 2023 strong. Okay, thank you very much, guys. Right. I hope you found valuable lessons, not only in terms of analysis, the approach to analysis, and of course the approach to trade management. Okay, stay safe, trade safe. Peace. Peace out, guys. I'll see you guys throughout the week. Remember to tune in to our another session later. I think it's about 12.5 hours from now, right? We should be covered by either Peggy or Emily. All right. Take care, everyone. Yes, I know you've been with me since the beginning. I have, right? A couple of you guys have been. Good stuff. See you guys. Bye bye.